The other part is seasonality. Seasonal tendencies, the effects of when the market is more likely to produce large range moves on the daily chart. And there's a lot of volatility. As an index trader, you want to know when there are earning seasons. And you also want to be aware that during the summer months, now this hasn't really been true in the last 2 months. I'm sorry, the last 2 years rather. The typically the summer months, and when I say that, it's like July, some of June's good, but July and August, they can tend to be really just cruddy, real cruddy type of market conditions where you don't really want to be pushing it too hard. And it's better really to just take those months off. And that doesn't mean you can't find trades. I've got to wet my whistle here. So understanding when there's the likelihood of having big moves, like for instance in spring, is a tendency for the market to draft lower in equities. Okay, so stock indexes or indices rather, they have a tendency to draw lower and be bearish going into the summer lows and then going into a low in the fall time, somewhere between it can I've seen it in years of my career where it starts a move in August, the last week of August, but generally it's like between mid-September and the first or second week of November. You're going to find a seasonal low there. And all you got to do is look for what I taught you in the core content. If you simply just use that model, look for index divergence, SMT divergence between the NASDAQ, this S&P, and the Dow. I don't trade the Dow. Okay, I don't care about the Dow for trading purposes, but I use it for an analysis. Like dollar, I don't trade the dollar, but I've always used it as a barometer for forex pairs. So it's going to be a diametrically opposed opinion held in dollar versus other currencies. Well, when you're comparing the three averages, S&P, NASDAQ, and Dow, and you're looking for a high to form in the spring, you want to see a divergence. One of those indices is going to fail to make a higher high. That's it. You have now witnessed the quarterly shift. Now, everything after that, start looking for market structure shifts bearishly on all time frames and look for the pattern that I taught you in the 2022 mentorship. And folks, I just fucking gave you an ATM that pays out every motherfucking year and it gives you the bias going all the way into the summer. That's it. That's the key. That's the fucking unicorn you're looking for. Well, how about in the fall? You're looking for the opposite because seasonal tendency wise, you're looking for a low to form. So one of those indices are going to fail and make a lower low. Once that occurs, what happens? That failed lower low in one of those averages, that's simple Dow theory. Once that shift occurs and they go breaking their short-term highs, you're now in a buy model. What does that mean? You're just looking for longs and you keep milking the longs with the largest leverage. And you can take shorts and you've seen me do that. But the bigger moves, the longer protracted candles on the daily and 4 hour charts are going to be to the upside after that occurs in the lows in the fall. So between like I said, think like the second week of September to the second week of November. That's your like, little sweet spot. And what you're looking is you're studying kind of you're like, can you back and tell me what you just said there again? I ain't looking at questions, but I'm sure it's probably what you're thinking. What does it look like? Where am I looking? What time frame? You're looking at a daily chart. You're looking for the highs compared between the NASDAQ, the S&P, and the Dow. Make sure I said that right. Those three averages, Dow, S&P, and NASDAQ. In the springtime, okay, April, March, I'm sorry, April, May time period. In that time period, you're going to be looking for, as the market's going to be going up, it will be. It'll go up, and on a daily chart, one of those averages, and I don't give a flying fuck which one it is. I don't care which one it is. It's not a point of me knowing which one's going to fail to make a higher high. I'm just looking for that to occur. Once that happens, once that occurs, and then you start looking at the 1 hour and 4 hour chart to look for a shift in market structure, just like I taught in that 2022 mentorship. Once that occurs, you have watched the seasonal high form in the spring, and it's all downhill going into the summer months. Baby, if you don't know what that means, let me tell you something. Go back to your fucking charts. As many years as you fucking want and just see how that is such a beautiful roller coaster into fucking profitability every motherfucking year. And you got clowns out there doing mentorships and signal services, and they're trying to buy all during that shit. And they're getting wrecked. They're getting destroyed, blowing out, and having to reset their simulator accounts. That's how the markets work, folks. And in the fall, on a daily chart, you're comparing the NASDAQ, the Dow, and the S&P. One of those averages are going to fail to make a lower low. All you're doing is simply waiting for that. You're simply waiting for that to occur. And once it does, go into your 4-hour chart or 1-hour chart and start looking for that shift in market structure bullishly. Once that occurs, you just watch the low form in the fall and just start looking for your best trades going long. You can, if you have not been trading at least for 2 years consistently, don't fade what I just gave you. Trade only in those directions. And you're going to get the biggest fucking moves you've ever had in your trades. And you'll be able to trust that they're going to move a lot more than just 5 trade Larry in fucking Texas that wants to get 5 ticks and thinks it's a big deal because he's got 24 contracts on it. No. Mm-mm. You want big fucking runs, big price runs. And I have students that are going in the Robbins Cup. I just gave you a beautiful blueprint to work within. Think about that. These are market dynamics that, I'll have people come in. Oh, everybody knows that. Okay, show me your fucking trades. Show me your executions going into next year. Do it. Because I'm going to be doing it. Oh, yeah, I'm going to be fucking doing it. Live accounts. Oh, yes, I'm going to be breaking fucking hearts. Motherfuckers are going to have their heads fucking smashed. Yep, your results are shit. I'm going to prove it. So we've talked about market structure, and the only importance really is knowing what I just gave you. That right there, that element of seasonality and how those shifts quarterly occur, one in the springtime for bearishness and in the fall when it's bullish. And what does it look like? The SMT divergence or Dow divergence, okay, where one of the averages diverge. And then you're looking at that shift in the market structure on a 4-hour and 1-hour chart. Once that fucking occurs, that is it. It's on lock. It's done. Then it's going to start grinding higher. You don't think it happened? Look at your chart. Why do you think I've been buying? Well, I've been talking about it's reaching for relative equal highs. It's going up to an imbalance. This is SIBI. It's filling. That's why. That's why it's following that model.